Hello, everyone, and welcome to another episode of the Forever Cash Life Real Estate Investing Podcast. Today, we're going to talk about hyperinflation. Is hyperinflation coming to the United States? A lot of people say yes, a lot of people say no. Let's dig into this today.
Welcome to the Forever Cash Life Real Estate Investing Podcast with your hosts, Jack and Michelle Bosch. Together, let's uncover the secrets to building true wealth through real estate and living a purpose-driven life.
All right, so let's jump right into that. So today's subject is hyperinflation. By the way, if you've never heard of me, my name is Jack Bosch. I'm the co-founder of the landprofitgenerator.com educational programs. My wife and I and our team, we have flipped over 4,000 pieces of land since the year 2002. We have also built up a portfolio of 700 units of houses or apartment complex units. We have been in real estate, living, breathing, and smelling and teaching real estate. We also run the landprofitgenerator.com real estate, land flipping, coaching programs, and educational programs with the investment dominator software, et cetera, et cetera. But today, we're going to talk about whether or not the hyperinflation that a lot of people talk about is going to come, and if and yes, and when, and so on. Now, obviously, I don't have a crystal ball, but I did go to college. I did go to college to get an MBA at a very, very good school. I'm originally from Germany, at the University of Mannheim, which in Germany is sometimes called the Harvard of Germany. And within that, and I got an additional MBA here in the United States. My wife has a master's in finance. And so we talk economics, business thing. We live and breathe it. We love it. That's what we do, right? We flip real estate business. This is the things that we just absorb. It's in our DNA. We just love it. So as a result, I love always looking, putting myself in a position to see what is the market thinking. Like, I belong to masterminds of real estate investors all over the country. I belong to masterminds of multifamilies. We run our own educational programs and so on. And through all of those things, we obviously hear a lot of the opinions from people. Now, there's a large amount of people that say, hey, hyperinflation is going to come. At the same time, there's a lot of people say, like, no, America has always been fine. America has always been good. So we're not gonna have that happening. Now, here's the deal. You cannot continue to print money like the US is printing money and not expect some level of inflation to happen sometime in the future. Now, the question is it going to be hyperinflation, or is it going to be more like the 1970s, like a stagflation, where the interest rates go up to 17%, right? Where inflation goes up to 10, 12, 15%, interest rates go up to 17, 20%. And at the same time, because prices go up so high up, people don't have the money anymore for other things. And we're hitting a stagnation at the same time that we have a high inflation, right? That's what happened in the 1970s. So, but let's go back into a time and actually define the term hyperinflation in the first place. Now, here's the thing. In the 1920s, here's what happens. Let me bring up my nifty thing here. In the 1920s in Germany, right, which happens to be the country I'm from, we had true hyperinflation. Now, what happened there is the following. Germany obviously started the World War I, lost World War I, and as a result, afterwards there was the peace accord in Versailles. And in Versailles, we're in France, obviously, they declared Germany the sole instigator and loser of the World War, and they forced Germany to pay huge amounts of reparations. Like literally in today's money, probably in the trillions of dollars. Now, what happened with that as a result, though, is Germany now started to sell stuff off, right? Like, how can, as a country that is destroyed, right, that has lost millions of people in the war, just like every other country, right? And this is not the Hitler times. This is the war before, right? This is the World War I. And how can a country like that just pay billions and billions of dollars, which today would probably translate into trillions of dollars in reparations? Well, they started selling off the gold that they had in there, now had in their vaults, right? That the Central Bank of Germany had in their vaults. Now, remember, back then, the dollar, the Deutschmark, the Reichsmark, as it was called back then, was still pinned to the US, pinned to gold. So they basically started selling the gold, and with selling the gold, they sold pretty much all the assets they have. They started selling buildings, if they were still up there, still standing. They sold all this kind of stuff, but the reparations were higher, right? They were higher and higher and higher. They needed to keep paying. So at some point of time, they basically said, you know what? Let's just print money. In essence, what the United States is doing right now, just at a much, much larger scale. So they started printing money, and first the other countries didn't notice anything, right? First they didn't notice. First they, and also the population didn't notice it, because, I mean, it's just one money printing factory that just prints out more money and kicks out more money, and then with that they pay all the people out there, and they pay the French, and they pay the British, and they pay the Russians, and they paid everyone that was kind of involved in that war, and that declared Germany to be the loser, which they obviously were, of course, right? This is not a political statement. This is more just a statement of fact. So Germany just started paying and paying and paying, paying. Soon enough, they had nothing to pay anymore, so they just started printing money. Now the population in Germany started also realizing that there was money coming their way, but first they were also in despair because they just survived the war, so they weren't going on big buying sprees. But there was at some point of time, so much money was being distributed into the streets, and so much money, the government printed so much money that and gave it out to the people and gave it out to the other governments, and obviously from there it came back into the country, because what are the British going to do with $1 billion Deutschmark? Well, they're going to go and bring it right back into the country and buy grains with it and buy other things with it, and so on and so forth. So, or the German government went and bought the grains with the Deutschmark that they had just printed, and then gave the grains to England, gave the grains to France, gave the horses and all the things that they wanted. Because back then, like, there wasn't like today, where they would just like print where the dollar is like all around, used all around the world, so you can pay your debt in dollars, and then other countries use the dollar, hold the dollar in reserve, and the dollar is spread all over the country. We were in the Maldives a couple of years ago, and you could pay with dollars everywhere, right? We've been to other countries around the world, and you can pay with dollars in many places in the world. Back then, that wasn't really the case. You couldn't just, the British could really do nothing with the Deutschmark. So either they took the Deutschmark and bought something, or they forced Germany to actually use the Deutschmark that they printed, pay out to other people, to the people, to the farmers and to the producers, and then buy stuff and bring those hard assets and give those to the other countries, which obviously needed them because it was just being destroyed. So now with that, now the Germans all of a sudden got a bunch of money, right? And they had the money. Now here's something happened. In a post-printing money environment, this is important, in a post-printing money, at the beginning of a printing money environment, people hold on to their cash. Because there is hold on to their cash, because they're like, okay, I got the money now. I've just went through a hard time. Let's not go and spend it. However, there's a point on which that balance tilts. There's a point on which that balance, like if you look at it, like if this is the balance, right? There's some point in which that balance just goes, and the scale goes boom. And that point is when people start realizing that they have enough money, that they're either safe because they have enough money, or that life goes back to normal, they have enough money, or they start realizing that the government is printing money like crazy and their money is losing value very quickly. So this is going to be important in just a second. So the first thing here is, in Germany, the latter happened. Germany, they were destroyed by the war. They were just like, they were just building stuff back up. And they started realizing slowly but slowly, first they got money. It's like, okay, I got money. Let's hold it on, like for a safer day. Let's keep that money. But then soon enough, they started realizing, oh my God, there's money now being poured in everywhere. Prices are starting to go up. If I don't use my money now, it's going to be worth less in the future. So I'm basically using money. Again, banking system wasn't developed as much. Interest rates in bank wasn't that much. There was banks, yes, you put your money in there, but you didn't really get much interest on it. The velocity of money, like you couldn't just wire money anywhere. It's the 1920s. So they went and they started realizing it, and they started spending the money. Now, when you start spending money, what goes up? Right? Remember, in the world, there's supply and demand. Right? If supply goes up, demand goes down, or if supply goes like they work like this. Right? If supply goes up, the prices go down. If supply goes down, the prices go up. The same with demand. If demand goes up, right? If demand goes, the demand actually is also the price curve. If the demand goes up, prices go up because the supply can't react right away, right? If I have higher demand, if there's more people wanting, right now there's a frenzy going on with this collector baseball cards and so on. If more people want baseball cards and there's only so many out there, what happens to the prices? They go up. So now what people started realizing is that prices are starting going up because the country's flush with money and everyone's holding on to the money, but some people are start spending it, and the word gets out that the government is printing money. So people are like, oh my God, if I don't use the money today, it's going to be worth less tomorrow. So they go spend it. And then another concept comes in, which is the concept called of the velocity of money. So here's the thing. If I have a $100 bill in my pocket, right? If I have a $100 bill in my pocket and I have a couple here, so here's a $100 bill. If I have this $100 bill in my pocket, if I hold on to this $100 bill, it's basically taken out of circulation. It's gone. It's not in circulation. Nobody can do anything with this $100 bill, if I use it. So if the government prints $1 trillion and everyone receives a $1,400 or whatever it is, $100 stimulus bill, and they're all keeping it at home in their jacket, right, or in their bank account, then nothing happens. Nothing happens because nobody's spending the money. However, if I take this $100 bill and I spend it today, and then the guy that I spend it with also goes and buys something. If I go to the baker and I buy $100 worth of goods, or to the grocery store, buy $100 worth of goods, and then the grocery store owner, also freaking out because he thinks there's no more supply, goes and that same day spends the $100 on more supplies, and then the person he bought it from goes and buys himself a new car, obviously not for the $100, but if that is perhaps $10,000 or $100,000, then they buy a new car, and the car owner goes around. So this $100 bill in a matter of a week changed hands 20 times. Now it behaved, this $100 behaved like if it would have been $2,000 in the economy. So in other words, it doesn't require a lot of money to generate inflation, right? But what it requires is, let me keep the $100 out here. What it requires, or to generate activity, what it requires is velocity of money. So as the velocity of money increases, it behaves as if it was even more money than is there in the market. And that's where the danger comes in. So what happens in Germany is the government printed money, flushed it around, put it around, and first nothing happened. Nothing, absolutely nothing happened, because everyone was hogging the money, and therefore the money had no value practically. It was sitting in the bank account, and it was not doing anything. However, as this all of a sudden, as this balance tipped, and people started realizing, oh my God, I need to do something, otherwise this $100 that currently buys me, I don't know, a dinner for 4 is only going to be buying me a dinner for 2 next week, and perhaps only a dinner for 1 the week after, because prices are starting to go up. So all of a sudden, everyone started racing to the stores and spending all their money, and whoever they gave the money to started racing to their suppliers and bought more supplies, and the entire economy started to spiral up. and ultimately also spiraling down. And what happened is that all of a sudden prices went up so fast that literally within one day, and I do have some of these dollar bills, I couldn't find it before this session right now, but I do have some of these Reichsmark bills where I literally have a Reichsmark bill that is 1 trillion Reichsmark. And what it could buy you at the end of that hyperinflation was 1 egg. Here's the thing, people literally went with wheelbarrows to the baker full of money, counted the money, and with that they were able to buy like 3 loaves of bread and a dozen eggs. By the evening, they would have needed 3 times the size of the wheelbarrow to pay the prices. That's how prices went up. That, guys, is the definition of hyperinflation. So this word is being thrown around massively right now. Are we going to have hyperinflation soon? We're going to have hyperinflation soon. But let's look at the reality on the ground. First of all, is there going to be inflation? Yes. Is there going to be inflation? There's no doubt about there going to be inflation. But the question is, what kind of inflation? Now, here's what I think is going to happen. So I should explain to you the real hyperinflation that happened in Germany in the 1920s, where literally everyone was kind of wiped out and so on. But what we're looking at right now is that the amount of money in the systems kind of like went up like this for like many years. And then under Obama in the big recession, and that's just not Obama's fault or whatever thing. It's not a political statement. Just in the big recession, it went up like this because Obama had a big bailout, right? It went up like that, and then it continued kind of like this, a little faster. And right now, with COVID, it went up. Literally, it went like this. It went up like this. It went up like that. And under Biden right now, so under Trump, it went up like this. Under Biden, went up like this. This is not political. It's just a statement of fact. So we look at this. We look at these kind of things here. Oops, I just made a speck on my wall. I got to paint that. Look at that. This from here to here. This here is 30%. 30+% of all the money that has ever been printed in the United States since the inception of the United States dollar. Like since the United States dollar was introduced, the amount of money went up little by little. That's just exaggerated. Probably should be flatter. Then it jumped up here. Then it went up, and now it did this huge jump. So 30% of all the money that has ever been printed has been printed in the last 12 to 14 months since COVID has started. How crazy is that? And that's what makes everyone say that we're going to have hyperinflation. But in order for hyperinflation to happen, there needs to be a couple of things also happening. Number one, this amount needs to be so freaking massive that it puts everything else out of it makes everything else look like children's play. And I'm not sure if that is the case. 30% of all the money ever created, multiple trillions of dollars. How many trillions was it right now? Let's say like 3 to 4 trillion, right? 3 to 4 trillion dollars have been created. Let me bring this a little closer. 3 to 4 trillion dollars have been printed by the government to put that up there. But let's put that into perspective. That has only taken the government debt up by about 30% of what it was before. It has not 10x the government debt. It has not 100x the government debt. It has not done those things, which is the equivalent of what it has done in Germany, right? In Germany, it wasn't government debt. It was the debt. Well, it was government debt. It was debt that Germany had to these victorious countries where they had to pay all these different things, and they didn't have the money, so they printed the money. Here is money that the United States printed in order to give to their people. Now, is that enough to generate hyperinflation? I don't think so. But it is enough to generate inflation? Yes. Now, the question is, how significant of an inflation is it going to create? Now, it comes down to the following factors again. First of all, the factor I just explained, is that enough? In the great scope of things, it's absolutely significant, but it's not a multiplying of the budget of the United States, right? Now, the debt is about equal to the budget, if I recall it right from my readings. And so we basically have similar debt than we have an annual budget, but at the same time, or perhaps even higher than that, but Japan has lived quite well over the last 20 years with a government debt that is 2 times its annual GDP. Actually, I'm talking about GDP, not budget. So that the debt is about the GDP of the United States, and GDP is the gross domestic product, how much the United States produces, which is obviously significant. But Japan, for example, has been living with 200% of that, like twice as much debt for many years. And Japan actually has seen a deflation happening. Now, why is that? It's because technology has accelerated things. So there's also some anti-inflationary tendencies that happen. And some of the anti-inflationary tendencies is that technology is actually helping to make things less expensive over time. So as a result, even though, and also technology allows production to accelerate so that supply goes up, cost of production goes down. So now we have more supply of cheaper items. So even though there's more money available, it doesn't automatically mean prices go up. That is different to the 1920s. Like grain would only grow once a year. It still does only grow once a year or twice a year with all the genetically modified stuff they're doing. But now there's other factors, technology and all those kind of things that wasn't a factor back then, work as a buffer of inflation. But the other part is the one that I mentioned already. And that is the big question mark of how big inflation is going to be is the question of what are people going to do with the money that they were given by the government. So, and here's the thing, if they start believing that the government is wasting that money, that the government is printing more and more and more money, and that the items that the money in the bank is going to be worth much less tomorrow than it is today, and that they're better off to go spend that money today, then we're going to go into an inflationary cycle. If they believe that the money that they have right now is actually going to help them save for a rainy day, and they're sucking it away in paying off debt and building up savings and not using the money, then we are actually not going to see much inflation. Right? Also, the third factor, and that's what I leave it at, is the third factor is the status of the United States in the world. The United States currency, the United States dollars, is still the #1 reserve currency in the world. 90% of all reserves in the world that are not held with gold are held in the United States dollar. This is not going to change overnight. So as a result, as all these governments are holding on to dollars, literally physical pieces of $100 bills in their vaults, in their federal reserves of their respective countries, that money is not in circulation. That money is sitting there somewhere and is not being pushed out. If the United States keeps printing money, at some point of time, these other governments are going to lose trust in the United States dollar. They're going to convert that back into silver and gold, right? Which means gold prices are going to shoot up. But at the same time, they might take on another reserve currency. Currently, there's no insight. Nobody trusts China enough to make it the world reserve currency. And other than that, the euro, it is too turbulent with the different countries and all the stuff that they're doing. So for the time being, all the world currency, there's trillions of dollars sitting in vaults of banks and of federal reserves around the world of the United States dollar. If that ever changes and these countries go and say, like, you know what, let's get rid of our dollar, they don't destroy the dollar. They send it back to the United States and change it for something else. And if that starts happening, that's when the hyperinflation can really hit home. So what do you want to look at right now is, is there going to be inflation? Yes, because they put $3-4 trillion into economy. And right now, everyone is still sitting put and not spending the money because they don't know how long COVID still lasts. They don't know what's going to happen to the economy. They're not yet comfortable spending all that money. Yes, if I go to the mall, I see the Louis Vuitton store has a line around the block. So there's quite a few people who are spending their money on Louis Vuitton, on Gucci, on Prada, and those kind of things. But the majority of people are socking it away right now and are keeping it safe in the bank, or what they think is safe in the bank. And as a result, the banks actually have more deposits now than they had before. So with that all said, therefore currently there's no inflationary pressure. The inflation report just came out this morning, 2.6%. So we're a little bit above what we want to be, but we know what the country wants to be. Is 2% is the goal, but we're in no shape or form anywhere close to hyperinflation. So the things to watch in summary is, what do people do with the money that the government has given them? If they start spending that money, that's when inflation starts going to go up, but probably not go up before about 5 or 10%. If on top of it, the government keeps printing money and keeps pushing out, keeps printing money, and the currency starts losing the trust of other countries, that's when the real danger begins. Now, how to protect yourself again, but I don't see that happening anywhere in the next 10 years, 10 or 15 years. Personally, that's my expectation. Having said that, is a 5 or 10% inflation possible in the next 12 to 24 months? Absolutely it is. It depends on what people do with the money they were given, how fast they start spending it. If the economy starts humming again, guess what? That money is going to start flowing. That money is going to start flowing quickly. That $1,400 that everyone got is going to start behaving like $14,000 because it's going to be moved very quickly. The velocity of money is high. It's going to be moving around very quickly, and that same dollar bill is going to be in many hands very, very quickly, and that's going to drive inflation quite a bit. So what do you want to do with that? That means interest rates are most likely in the next 24 months or so going up significantly. Lock in any debt that you have, lock it in currently rock bottom interest rates, right? And do these things. And now ultimately I always have to answer the question, what does it happen with land? Really nothing, guys, because if people have money in their pocket and they start spending it, they're going to spend it for land. That means that the outlook for land continues to be great. The outlook for land continues to be very bullish because in combination with all the COVID-related virtual working, the land in the outskirts of town, the rural land, all of these things, all of these assets is the things that people are going to spend money on. They're going to spend money on the RVs, on the ATVs, because when they spend the money, they spend it on the fun stuff in life, which means that, yes, those prices are going to go up, but they're going to use it to buy land. They want to have land. So we are very, very bullish on the land for the next at least 2-3 years. But then again, I hope with that, I was able to kind of explain the concept of inflation, explain the true hyperinflation, which I don't expect, explain the velocity of money, explain the concept to make you understand that in my opinion, there's not a hyperinflation to fear, but inflation is going to come. So you can protect yourself by investing in hard assets, by learning how to make money, right? By locking down interest rates really low on debt that you have, but most importantly, by jumping on this boom time that we're about to have, that will come with some raised prices, and really use that to make the money that you can make in your life in order to then buy the assets that do really well through inflationary periods, particularly income producing real estate as well as land. All right, with that said, thank you very much. This concludes another episode of the Forever Cash Life Real Estate Podcast. Looking forward to your comments. Would love to get your feedback on this, and looking forward to talk to you soon. Bye-bye.
Enjoyed this episode? Then make sure you like, subscribe, and post your comments and questions below the video. We're looking forward to hearing from you.